Attention, please. The show starts in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, go.
Hey everybody, and welcome back to the Crypto Show. Your host Superman in the house, and man, have we got a show for you today. We've got one of the largest projects on PulseChain in the house, and we're going to be interviewing Jexxa about VOUCH. So it's going to be exciting, and we're going to learn a lot, no doubt. Jexxa is one of the best communicators out there. I've watched him for several years, and it's exciting to have him on. So we're going to have a lot of fun, I think. We also saw overnight on the markets, we saw Bitcoin rebound. We saw Ethereum do not too bad, and we had big numbers come out of Michael Saylor's strategy overnight, as well as Bitmine immersion with Dom Lee. So we're looking pretty good in this so-called bear market. So I think things are exciting, and PulseChain is going to benefit from that big time, I think, moving forward. There's rumors of Richard Hart doing a live stream as well. So what better than to bring on Jexxa right now and talk about VOUCH, one of the biggest projects on PulseChain. I think it's pretty exciting. Now, if you've got any questions, of course, get in the chat and ask some questions. I'm sure Jexxa will be happy to answer some of those as well. And if you're not following Jexxa, do follow Jexxa and VOUCH on X as well. We'll give you those social details later on. But it's going to be fun. Good to see you, John. All in PulseChain, absolutely. I like it. Man, you're picking up massive bags right now. I'm sure VOUCH is enjoying the price of Pulse right now too, no doubt. We've got Hexavator as well. Hey, gang, good to see Hexavator. Man, Hexavator, you're starting to become a rising social media star there, Hexavator. I don't know if you planned it, but it's starting to happen, which is funny. It's always people that try not to become influencers that always end up becoming one. We've got Craig in the house as well. Morning all. Great to have Jexxa on the house. It is indeed. So without further ado, let's bring him on. Welcome to the show, Jexxa.
Hey, mate. Thanks for having me on.
Yeah, so it's a pleasure to have you here. As I said in the intro, I've watched you for quite a few years, and I've always been super impressed with your intelligence and your communication abilities, and of course the character as well, which comes through on your streams as well, which is great. We want to talk about VOUCH. It's made quite an impact on PulseChain, and I think it's going to be pretty big in the future. So I was just wondering whether you'd give us a little bit of a background about the history and maybe why you set it up as well.
Yeah, for sure. First of all, thanks for the kind words. It's always nice to get that sort of feedback. I've been kicking around the ecosystem for a while, and for most people that know me, very much from the first days I was in the community, I was all about security and teaching people how to do things safely and things like that. So I'm very much a nerd at heart. I'm quite technical in the way I approach things. I've come from a technical background, and I guess when PulseChain launched, I wanted to put my tech skills to use, not only from the security point of view and teaching people how to do things correctly, but from a validator point of view as well. So when testnet was up and running, I was already validating. So right from the very beginning, been running validators on PulseChain. So very much had an interest in that. So why did VOUCH spawn? I had a lot of people hitting me up. So friends that would say, oh, look, I've got my Pulse sitting there. Can I do something with it?
Yeah.
And inevitably what ended up happening, I was running validators on behalf of these guys, and I started putting in systems and things like that to make sure it was done in a safe way for the guys that I was supporting, and making sure they were getting their distributions automatically fed out and things like that. And I thought, well, hey, I'm pretty much running validators now. Let's have a look at what's going on in the liquid staking world, and we can cover that in a bit more detail in a moment for people that don't understand what liquid staking is. But that's probably one of the biggest things on Ethereum is the liquid staking protocol. Yeah. So Lido, Rocket Pool, and there's a handful of others as well. So that's obviously a big use case in the Ethereum world, and in a lot of other chains as well. They have similar sorts of things going around. So yeah, really wanted to bring something like that to PulseChain, and eventually just dove in and went, okay, let's get it up and running. Like no one else had done it, so I thought, okay, let's push ahead and get this moving. And it's morphed and it keeps growing. And what started out as something simple, the ecosystem has grown to be quite involved now. So we might have to take a bit of a step back, and we'll go back to the roots of what VOUCH is at the core, and then we can sort of get to where we are now. And that's probably where, if there's people in the chat that have been around VOUCH for a little while, they might have some more questions about where we go to next and what we're currently doing. So we'll try and cover the
exciting. Yeah. Once again, if you guys are watching, get your questions in. We'll be building up over this period of time, talking to Jexxa about VOUCH. So get your questions in. I really do look forward to some of your Einstein questions out there, guys. So have fun with that. Now, obviously, validating is very important for PulseChain. Could you give us maybe just a fundamental on that, just for people that may be familiar with the validating side of PulseChain?
Yeah. So obviously, we run a blockchain. Someone's got to run the servers and secure the network. So when you push the buy button or you push the send button, you're bundling up a transaction. That's got to be approved by the network and agreed that is the true state of the network. So that's how we end up with this secure blockchain. Now, that doesn't happen by magic. There's servers that need to run software, and so you're actually doing real world work. You're firing up servers on either self-hosting or on cloud platforms. You're managing the software. So there's real world work that you are doing as a validator, and the way to encourage people to do that work is to incentivize them economically. So much like there's Bitcoin miners, we have the validators in PulseChain, very much like the validators in Ethereum. So you've got to reward people for wanting to run the hardware and the software, and we're a proof of stake network, so you have to actually put skin in the game. So you don't just fire up a bit of software, you've got to actually stake some of your collateral, your pulse, to show that you've got a vested interest in the network. So that's the whole proof of stake theory. Now, miners and Bitcoin, they do it a little bit differently. They spend money on electricity and the hardware. That's their economic investment, and they get rewarded with Bitcoin when they win a block. So that's sort of the similarities between the two systems. So what we might do is if you chuck up a screen share, and I'll go through the very basics we'll just assume no one knows how staking works on PulseChain.
Yeah.
And once we explain how that works at the base level, then we can understand why VOUCH came about. So let's have a quick look. So on PulseChain, this guy in the orange here, he's our validator. Now he's got to put in 32 million pulse for every validator he wants to fire up, and he can run as many as he likes, depending on how much capital he's got. If you're out here in user world and you send a transaction, it gets sent to the validators, they approve it, validate the actual transaction, it gets written to the blockchain and stored immutably for the rest of the time.
Yeah.
Now what happens is pretty much each block the chain's producing, where it's producing yield. So this is native yield that is produced by the blockchain every day, and it's shared between all the validators on the network. So if there's only one validator on the network, it would get all the rewards that the chain produces. If there's 100, it gets divvied up between the 100 of them.
Okay.
So that's effectively what happens in PulseChain in terms of proof of stake. Validator's putting his proof of stake in, he's validating the transactions and getting paid rewards. Now, the problem for most people is, do they have enough stake? And 32 million pulse on PulseChain now, it's pretty affordable. But 32, the reason why the 32 numbers come about is on ETH, you need 32 ETH. Well, you used to, there's a slight change. But when it first started, you needed 32 ETH to stake. That's a lot of money. Yeah. So where the liquid staking component came in, it was, okay, a lot of people don't have the capital and they don't have the expertise to be able to run the validator hardware and software. It's quite technical in nature. hence where liquid staking came in. So the way that actually works is it divides up the roles a little bit. So you still have this guy, which is a validator, but
Yeah.
rather than him having to put in 32 million, he only has to put in 12 million. Now, to stake on PulseChain, you still need the other 20 million to come from somewhere.
Yeah.
Where does it come from? Well, we have individual users out here that can go, okay, I've got Pulse sitting in my wallet. I don't want to be a validator. I don't have the skills, time, or inclination to do it, but I want to get some of the rewards from the blockchain. Okay, so they chuck in their Pulse into in this case, the VOUCH staking contract. And when we get a pool of Pulse built up here, so there's, say, another 20 million Pulse sitting here, then this guy can take his 12 million, grab 20 million from the pool, and stake that to create a validator on PulseChain.
Okay.
Yep. Now, what happens is the rewards that come from the PulseChain, portion of it goes back to the validator based on his stake, and the rest of the rewards go back to the staker for him putting his effort in, or him putting his Pulse into the mix. Now, the slight nuance in this is, and this is where the liquid staking component comes. When this guy deposits his one Pulse into here, when the system first booted up, he got one V Pulse back. So there's a ratio between these two tokens. One Pulse equaled one V Pulse. And this guy just leaves that sitting in his wallet. That's all he has to do. That's the liquid staking component. He's put something in, but he's got a liquid token straight back out. So he can send it, sell it, do whatever he likes with it.
Okay.
Yep. And it started off at that 1-to-1 ratio. But we're earning these rewards over time, and they're coming back into this pool. So how do we distribute the rewards in an efficient way? And the way we do that in liquid staking is we change the ratio between these two tokens.
Okay.
So let's have a look at that, how that works. So when it first started, 1-to-1. So if you put one Pulse in, you got one V Pulse out. And over time, more Pulse was building up in this pool. So the ratio between these changes. So if you're still holding your one V Pulse in your wallet, it's now worth 1.1 Pulse because there's more going in the pool. Over time, 1.2, 1.3. So if you came back to the protocol and wanted to redeem your V Pulse token, when you put it into the protocol and redeem it for the Pulse that's in there, it gets more Pulse out than what it had originally put in.
Okay.
So it's like and this is a bit of a play on words with vouch. So it's like a voucher for your stake on Pulse. So you're holding a little voucher, and when you come and redeem that voucher, you get more Pulse back.
Okay.
Okay. So that's liquid staking in a nutshell. Now, pretty straightforward systems, a lot of complexity in the background in the contracts and everything that controls all this, but users don't have to worry about that.
Okay.
They just know they put their Pulse in, they get their V Pulse out, and it grows over time. So that's liquid staking in its most basic.
So do you guys provide the hardware? How does that work in terms of making this easy for people?
Yeah.
Yep.
We have a couple of different validator types in VOUCH. Anyone can be a validator on VOUCH. If they know how to operate the hardware and the software and they've got some stake, they can come and add those services to the network, to the ecosystem.
Oh, okay.
Yep. So it's like think of it like a marketplace. I've got the skills and the resources to be able to run a validator.
Yeah.
And people have got spare Pulse sitting in their wallet that they want to put to work. They meet in the middle and you create that market. Now, the validators don't do that for free. They get a 5% cut of the rewards coming out. So effectively, if you're a staker, you're paying a 5% cut, not on your principal, but of the rewards.
Okay.
Yep.
That's pretty,
So they
pretty fair.
Yeah, so they get paid a little bit for doing the validators get paid a little bit for doing their work. Yep.
Now, I don't want to jump ahead too much here. What is, given that we're Pulses at the moment, what is the probability of validating? Is that a fair question at this time? Or?
Yeah, that's a good question. So on pure percentage terms, the yield that PulseChain pays out at the moment with the current validator set, it's about 9 to 10% per annum. Yep. Now, if you're I said, you've got to run hardware here. So if your hardware costs are expensive, you've got to run a lot of validators
Yeah.
to make that worthwhile. And I think the last time I looked at this, the sweet spot for me was if you were self-hosting, so you weren't paying for cloud provision services. Let's assume you already own the hardware.
Yeah.
You'd want to be running maybe 20 to 30 validators on your hardware.
Okay.
Yep. And then that would make that worthwhile. Obviously, when PulseChain started off, price was a little bit higher, made that more economical. So it varies over time based on how many total validators there are and what your costs are to run your hardware.
Okay.
Yep. But yeah, all good questions. Now, from here, like that's Vouch at its basic level. We can really start to get into the weeds now and see where Vouch has gone. But in this mode here, Vouch ran for about 12 months.
Okay.
So we wanted to stabilize the system, just wanted to get the liquid staking component up.
So that's when did Vouch launch?
I think it was October 24, I think. I get a bit muddled on the date.
Sure.
Actual years now. Time's sort of flown by on PulseChain.
Sure.
Yeah.
Okay.
But yeah, so been up and running for close to 2 years, I think.
I'm trying not to front run certain questions because you may have them coming up, but Vouch is very large. You had a very large number of validators. Some of that seems like it's system validators or validators you or maybe others have put in as a baseline. And then there's a lot of people that have come in and used Vouch as part of the tokenomics. So I'm just trying to get an idea of how that works. Yeah.
Perfect. Yeah, no, that's good. So you brought me back to the original question you asked, which was the validator type. So yes, anyone can come in and be a validator, but we also have what we call trusted validators. And these allow the system to scale up really fast or scale down really fast, depending on how much Pulse is sitting in the pool.
Yeah.
So that's a prominent part of the validators in Vouch are what we call these trusted validators, where they're owned by the ecosystem, essentially. Operated by the ecosystem.
Are they providing a public good? In other words, their revenue is going to the protocol, or do they get paid for a service? How does that work?
Yeah, so they still get their 5% cut for the work that they do, because there's operational costs there basically you got server infrastructure there you got to pay for. So there's a real world cost that's got to come from that. So they're not totally altruistic. They've got to be viable as well. Otherwise the protocol's not viable. So yeah, there's definitely that component of it. Now, just in terms of total validators, so this is PulseChain stats. Those guys do a really good job of tracking everything on chain. It's probably the most accurate place for validator information.
Okay.
And as you can see, we started out from day one with we had a lot of I think Richard ran a lot of validators, and then he destroyed those validators, pretty much just sent all the pulse that was in those validators to the burn address. And then from there, the community basically took over and started running their own validators. And we tend to sit around the sort of 50,000 K mark in terms of total validators. I'm not sure what we are.
And how do you feel about this number of validators? Is that good for the system? Is that appropriate? Do we need more?
To put it in perspective, Ethereum has something like, I think it's 500,000.
Yeah, something like that. I think.
Yeah, and that's why the yields are much lower on
about
Ethereum.
2.8, something like that. 2.8%.
Yeah. So the more validators you get flood in, the lower that yield goes. But you would hope that the price of the token goes higher as well.
Yes,
so we'll probably see that change over time. If we see an uplift in the price of Pulse, you may see more validators coming because they want to get that juicy yield.
Is this a good representation of, the price chart of Pulse and the ecosystem value? That we have 50,000. Is there some sort of reflection in terms of Ethereum, obviously with the price up much higher and all the big ecosystem and things? I mean, is there some relationship there?
Yeah, like most yield-based systems, the market will find fair value. So if people, I'll explain that a little bit more. So if people find a better place to put their money,
Yeah.
they'll move it. So profitability will only get to so much, or if you keep getting validators come in and on board more, and the yield goes from 10% down to 2%, people go, oh, you know what? I think I can go get 5% over on protocol X, and they'll shift over to there, or like they'll find some other way to put their capital to use because they want to be the most efficient they can. Now, obviously, there's a lot of things that go into that, like risk, and it's not just a straight, okay, I'm going to do it on pure percentage. You've got to add up a lot of other things. But most people will stay somewhere where the yield is good until it gets to the point where they can be more efficient somewhere else.
Yeah.
So the system will find an equilibrium.
So how would you, just before we move on, so that level seems about appropriate because obviously market's deciding. The composition of this validator, who do you think they are? Are they just all PulseChain maxis and protocols like VOUCH? Is that essentially what's...
Yeah, bit of a mix. So and it's a healthy mix. It's good. So we've got, let's just see if we can sort of pull it down a little bit more. I think we've got some more stats here. Let's have a look. So this is the VOUCH amount of validators. So we're running about 9% of the network validators.
Yeah, and that's incredible. That's incredible. Yeah. It's really
so
great.
that means approximately 1 in every 10 blocks we get a block reward, and that will become important as we talk a bit more. Then we've got the Validator X guys, so they're sitting at around about 5.5%, 6%. So that's good. You got this is another liquid staking protocol, so you've got at least 2 of those in operation, and that's healthy. You don't want just one validator dominating the market.
So it's kind of your Lido and your Rocket Pool together or something?
Yeah, essentially. Yep.
Yeah.
And then you've got a whole smattering of all. So that's VOUCH there. That's Validator X. Not sure. This could be someone like Rackham or someone like that. I don't know.
Sure. Yeah.
I know he's running a few.
Yeah.
And then you've got other people that are obviously holders of Pulse that are running their own.
Are these large? Have these been largely matched to PulseChain sacrifices or just new big holders? Or
I haven't bothered to dig into the detail, but I know that a lot of them are people that have been around since the very beginning. So yeah,
well, that's a great breakdown.
Yeah. So it's good. We've got a pretty decent sort of covering. I think if you go and look at Ethereum, you'll find it's much more concentrated.
Yeah.
And I think you'll find that even gets more concentrated now that institutions are coming in, and when institutions can provide yield to their customers via these staking platforms, because that's the big thing that's been going on in the background is they weren't allowed to do the staking services. It was seen as securities and all that kind of stuff. But now I think they've loosened up on that. And they've also changed a lot of the staking rules where I mentioned on Ethereum, you used to have 32 ETH to stake. Now they've changed that where I think you can go as low as 1 or 2 and up to, I think it's something like 2,000 ETH per validator.
Yeah.
So that accommodates more of the institutional type stuff or the larger players, for better or worse.
Yeah.
Yep. Okay, so that's liquid staking and all that encompasses. You got any more questions on that?
This is the most basic utility, isn't it, on PulseChain is validating, and you guys have opened up, I think, obviously one of the blue chip markets, which is a liquid staking, like we see with Ethereum, and how big that is. So this is a really great service. So you guys have taken a great initiative there with this. Now you guys have evolved it though since you've set up the basics. So maybe it's
So this was always phase 1 was liquid staking protocol, and then phase 2 was okay. Let's bring in the ecosystem's token, but not just a token for the sake of having a token. There's an end goal of having the token, and that is eventually phase 3 will be more of a DAO type system where users have more input onto the various settings in the ecosystem. And we do have quite a number of settings now that users will hopefully in the future be able to vote on and set some of those settings. And it's more about where rewards go since we've launched the Vouch token, because that's probably the more exciting bit. This is really good, and it gets you.
Well, rewards also impact behavior, right? So I mean, it's
Exactly. So
some interesting issues there around around the DAO and setting those
yeah. So
dials.
there's no, like, this is great to have something that captures yield, but what do you do when you capture it? Does it just all filter out of the pulse chain or go elsewhere, and or do we try and build a system that captures the value and leaves it on chain and allows people to grow their value on chain? Which to me, that's the ultimate. If you can build your financial ecosystem
Yeah.
and you're invested interest in staying there and growing it, and you can actually grow your wealth there, that's, to me, that's why I wanted to do a lot of this. Is you want to build the systems you want to see in life, and I'd rather own the financial rails, like be a part owner of the financial rails that we're building here. So that's the whole preface of the initial part of Vouch, but also stage 2, which is the Vouch token. So probably
So liquid staking is arguably one of the lowest risk, obviously relative to crypto itself.
yeah, I've got to be
Right?
careful saying things like that. Like,
Yeah, no,
everything carries risk.
risk.
So
Yeah.
I
Well,
understand
that's why I
that.
said within the context of crypto.
Yeah. In terms of impermanent loss and things like, we don't have impermanent loss. So it's probably more easy to understand is definitely a way to put it than providing liquidity. Liquidity, you've got to understand a lot about the ratios and how things move and how you control your liquidity. This is pretty straightforward. You put your token in, you get the yield from the chain back. It's pretty easy to understand for most people.
Yeah.
But I don't want to make it sound like everything's risk-free, because you're dealing with smart
No, it's not,
contracts.
certainly not risk-free, but it just relative to a lot of projects on PulseChain, it would be on the lower risk side relative to others.
Sure.
Yeah.
But it's also like, and that's reflected in the yields and things like that. If you're getting 300% yield, well, the questions you need to be asking is, okay, where is the yield coming from, and how much risk am I taking on to get that? Yep. All right. So now this is a pretty heavy looking diagram. So we'll break it down.
So this diagram here is now is this phase 2? This is the
So this was phase 2. This launched, I'm saying, about a year ago, and I could be off a little bit. It might have. I think it was funny, the day that I launched. I think it was October 24.
Yeah.
The initial launch, and then it just so worked out that I think it was around within a week's time frame. So maybe October last year was when the Vouch token went live.
Okay. McBee's got August or something. Yeah, I'm not sure if that's McBee.
I don't know, man. The date, it's
around that time.
Bit of a blur.
Around that time. Yeah, around that time.
It's been around a little bit. Yeah. So anyway, this box that you see here, this is what I've just explained. That's the liquid staking component.
Yeah.
So what we done with phase 2 was we launched the Vouch token, and it's about value capture and governance in the future, but
Sure.
primarily value capture now. So the way it works is, we said that we're always producing yield from the blockchain over here. There's two types of revenues that come from being a validator. There's straight up validating rewards, and that's consistent, paid out like a heartbeat, just gets paid out every day. And then there's something that is more demand based, and that's priority fees. So when you're sitting over here as a user and you push the buy sell button or the send button, you pay gas fees.
Yeah.
And a part of that is a priority fee. And that priority fee actually goes to the validator that produces that block.
Very nice.
So as demand ramps up on the chain and you see gas prices spike up and you're cursing that you're paying so much in gas, the validators are sitting there going, whoo, this is great, because we're getting clicking.
We've had a few of those moments on chain, haven't we?
Yeah. So what we do in in Vouch is those priority fees that the validators are getting, we inject them into something called the distribution layer, which I'll go to in a minute. So that's one form of revenue in VOUCH. When we launched the VOUCH token, it's a fee-based token. So volume on the token also produces revenue, and it gets injected back into our distributor layer as a stream of revenue for the system.
Okay.
So these were our first two revenue streams that we brought into the ecosystem that are not solely based around validators. It's about growing the ecosystem.
Okay.
So what's important is what we do with these revenue streams, and this is what I mean about capturing the value and keeping it in the ecosystem. Is the way this revenue is used is it is used to fire up more validators.
Okay.
So a percentage goes to firing up more validators, which in turn brings in more revenue. We do a lot of buying and burning of VOUCH, and any VOUCH that's brought off the market, we can distribute that to holders, stakers, validators, etc.
Okay.
And so for the longest part, when phase 2 launched, we had a very aggressive burn schedule. I think 40% of the revenue coming in to here was either 40 or 50% was going to burn the token. So buy it off the market, burn it. And we've burnt something like 3.5% of the supply or thereabouts.
Yep.
So it was very, very aggressive. And that's been fine. And we're also giving rewards to VOUCH holders as well. So that was nice. All you had to do was hold the VOUCH token and you were getting a stream of some more VOUCH and some VPulse.
Do you claim those, or they just drop into your wallet? How does that work?
That's auto distributed.
Okay, nice.
Yep.
Yeah.
And the inevitable question we got from everyone was, okay, that's cool. I've got this VPulse token and I've got this VOUCH token. What can I do with it? Can I stake it anywhere? Can I do anything? And I just kept getting hammered. What can we do with it? How can we use it? So we added another phase to VOUCH recently, which launched within the last month. We'll call that phase 2.1, and that was the staking of VPulse and VOUCH token.
Nice.
So that's been the biggest change we've had in the last few months, and personally, it's one of the more exciting things I like about the ecosystem now, because it's introduced a third revenue stream, and it's still all about capturing the value in the ecosystem, and we can really reward all the players of the ecosystem in some pretty clever ways.
Okay.
So before we dive into that, any questions on that?
Yeah, does anyone have any questions other than myself? Get in the chat there. I think that's all pretty straightforward. I'm looking forward to the next of 2.1, I think it is.
Yep. So we'll take a bit of a departure from this image here, and it's getting a bit complicated, that one. So let's see if we can simplify it, and we'll just look at this flywheel here. So those two revenue streams I just mentioned were the token fees and the validator priority fees.
Yep.
Now, they're both very much demand-based. The token fees come from volume on the token trading.
So it's got reflection tax on it. Yep.
Exactly, yeah. Yep. The validator priority fees come from on-chain use. So if the chain's busy and people are trading around a lot and moving funds, then that generates a lot more priority fees, and that's great for validators. So every now and then we see a massive surge on PulseChain where the gas fees just shoot through the roof, and that's all the priority fees being paid. Once again, very demand based, and we said, okay, how can we get a bit of a flywheel going where we've got something that's not so much demand based, and we're making use of that base yield that get paid by the chain each day. So that heartbeat yield that I said just gets paid every day. How can we put that to use in the ecosystem? Okay. And that's where we introduce something called a capital yield pool.
Very cool.
Yep. Now, what that means is people can, if you want to, I'll take a step back and we'll dive into that into a second. So phase 2.1, the staking component we released, comprises of these three pools. Capital pools, which is this bit here we'll talk about.
Yep.
standard pools, which is your typical single-sided type staking.
Okay.
Yep. And then LP pools, which is like LP farms. If you've got LP tokens, you can deposit them and get rewards for it.
Is this in third-party farms or something that you guys are setting
this
up?
is something that VOUCH can do.
VOUCH can do. So it's an internal yield incentive. Okay.
Yeah,
Fighting
exactly.
LP. Okay.
Yep. Now, the LP pools at the moment for us are disabled. They're there sitting in the background. We can flick them on whenever we like, but we don't want to just flick them on for the sake of it. There's got to be a reason to do that. So what we're focusing on at the moment are the first two, the capital pools and the standard pool. Now, the capital pool is for staking VPulse. So that's our liquid staking token. The standard pool, we can do all sorts of things, but for now we've only enabled a VOUCH staking pool. So it's been very deliberate why we've done that. And it'll make sense as we peel these apart a little bit. So let's have a look at our capital pool. So we mentioned that you can stake your VPulse into the capital pool. Now in practice, you can actually stake Pulse as well, but it's instantly converted into VPulse.
Okay.
Yep. So that's just makes it easier for people to get into the pool if they want and they're holding Pulse. But effectively, it all gets converted to VPulse. Now, what you do as a staker in a capital pool is you choose to give up a part of your revenue. So that 10% yield we said you get if you're staking your Pulse, you're choosing to give up a part of that to help grow the ecosystem.
Okay.
So we call that the pool rate. So you might get 35% of that amount and 65% gets injected back into the protocol. And you go, well, why the hell would I do that? But what you actually get is you get paid out in VOUCH tokens. At the moment, you're getting paid in VOUCH and VPulse, but we're going to really ramp up the VOUCH side of things. So you're choosing to give up some revenue, and that revenue that you choose to give up is essentially a third stream coming in here that will go to grow more validators and also do all this other stuff that we do as well. So you're helping contribute to the growth of the protocol. So we think you should get rewarded for doing that. So you're giving up some of your Pulse, but you're getting back more VOUCH tokens.
Okay.
Yep. And it's not an infinite drip of an infinitely mintable token. So VOUCH has a fixed supply. We've already burnt 3.5% of the supply. The VOUCH you're getting is brought off the market. So we're buying VOUCH off the market and giving that as rewards to people in the capital pool. Yep. But you're also growing. It's that flywheel thing that I was explaining.
Yeah.
So we're getting that flywheel going.
You're growing the base.
Yeah. Yep. So as we chip in a bit of capital, it grows more validators. We buy more VOUCH. Hopefully that increases volume on the token, and we just get this circular reference where we keep building the ecosystem like a snowball over time. We can keep growing and growing and capturing that value, and we're all working towards a
kind of like in a reinvestment rate kind of idea.
Yeah. And as like when we get surges on PulseChain, and it's quite amazing how much capital flows into the validators when there is a big surge on PulseChain. And at the moment, everything in crypto is super quiet. So we've built all this infrastructure here, and when we start getting volume come back in, these two components will really kick in as well. So at the moment, the non-demand based stuff is just continually growing the ecosystem. But when and if we do get bull runs come back, which hopefully we're seeing.
Yes.
Something soon, then all these start working in unison together, and everyone sort of benefits from the.
I see you on the phone now. Hey, Richard, it's time to stream again. We're ready. We're ready.
So that's sort of that's what the basis of kicking this flywheel off is doing. Is we're building the value in the system here, and everyone gets to keep building. We've built something where we think people where they'll want to stay, and they'll get rewarded for staying in the ecosystem.
Yep.
So sorry, I'm jumping around a little bit here on all.
That's no fun. I think we're following this. Yep.
Yeah.
It's cool.
Yep. Now, so that's the capital pool side of things, and we'll touch on the standard pool side of things because it is important. That's for staking vouch. And at the moment, you too get a bit of VPulse and a bit of vouch for staking, but you also get to keep your holder reward. So remember, we said if you just held vouch, you were getting a drip. Yeah. So that still remains. Now, what we're doing at the moment is we've introduced the staking, and we've had to look across the ecosystem and go, okay, are we hitting the growth points we want, and do we need to tweak any of the settings to make it more performant and make sure that the guys that are giving up their yield over here are getting rewarded appropriately? So we've been up and running for about a week and a half on the capital pool now. So we're starting to collect some data and see, okay, well, yeah, we're doing some things good, but there's a few other things we think we can tweak.
Okay.
And those changes will probably happen in the next few days, as we'll tweak some of the percentages that we can route through the system to make sure that these guys are awarded, these guys are incentivized for the right behaviors. And what I think the right behaviors are is, if you're prepared to give up revenue on this side, you should be getting a decent chunk to make up for that in terms of rewards.
Yep.
And I think you're probably better to get more vouch than VPulse. Yep. And then as you're earning more vouch, you can go chuck it into this pool and get more VPulse. So we want to make this one more heavily weighted to VPulse.
Do you have a auto compound function or redistribution function?
Well, effectively, it is an auto compound function.
Well, going from capital to standard with the yield that you...
Okay, so no, you can't auto do the move between the pools.
Yeah.
That's an interesting concept. Maybe we can look at that. But yeah, you do need to actually get claim your tokens and move them across. Yep. But the value in the ecosystem, it does, the yield does actually auto compound in terms of the VPLS token. Like, you don't have to do anything with that. The token's value constantly grows in value relative to Pulse. So it's like an auto compound.
Yeah.
So what we want to do is we want to get it to the point where people that hold vouch are earning more VPulse just for holding it and get rewarded in vouch for staking it. Yep. But then that VPulse they're earning, they can come and put that back into the system here, earn more vouch, put that back into the system here. So keep building on that loop, which is what I sort of showed here. This is this loop that we can get going where you can keep building value in the ecosystem.
I guess you've been assessing the first week and a half of activity along there.
Yeah, and what we've seen is a lot of inflows into the capital pool, but it takes time for the vouch that's getting brought off market to come back and get deposited in the pool and build up over time. So the yield starts off
so it trickles
over time, it grows.
It builds up. Okay.
Yeah, so it builds up over time, and it's pretty cool these days. We've been using some really good AI tools to look at where flows are coming from and do simulations of, okay, if this continues, how does that look? And okay, if we tweak this setting, what happens? So it's pretty cool what you can do with AI now. Is you feed a lot of really good information, both hypothetical and real world, and it's really good. Like, it can do calculations that us mere humans we wouldn't be able to do. So it's good for looking at that sort of stuff. So I'm doing a lot of that in the background and saying, okay, well, if we tweak these settings, what does that mean for the various players? Yeah. So people will see some of the settings change in the ecosystem over the coming week or so, and we'll continue to do that depending on how the market conditions look. If we start getting a lot of activity on chain and we need to tweak the numbers again, we'll tweak the numbers again. But that's the beauty of vouchers. We've got a number of levers we can pull, depending upon the state of the markets.
Okay.
We've gone deep into the weeds here, man.
No, I think this is perfect. I think you've gone perfectly in the right way of explaining it. You've also got liquidity pools as well. And we've got a question from B Crypto there about when liquidity pools switched on, which you kind of mentioned before.
Yeah,
Now, yeah,
not in a massive hurry to switch them on at the moment. Like there's a lot of things that we need to monitor and tweak and get right just because of the capital pools and the standard pools. So I want to let those bed in first before we go adding another thing into the mix. Nice to have those abilities to switch them on, but I'd rather let the system settle and see what we need to tweak and make sure everyone's feeling good about this next phase and what we're trying to do with this.
well, liquidity pools, arguably, that's just going to fatten up your LPs, is it not? So,
Yeah.
is that something you may not want quite at the moment?
Yeah, that's the thing. Like, if we want to try and induce volume on a token, you maybe don't want to make them too thick, or we can incentivize particular pools as well. So if there is a pool that we think would benefit by getting people to add LP to, then we can flick on that individual pool. So that's so many things we can encourage, and that's all about, like I said, it's about incentivizing the behaviors you want to see in the system and not penalizing people for doing the right thing.
There can be a bit of trade-off between volume and price impacts, I guess, depending on where you are in the growth of the ecosystem.
Yeah, exactly right.
I know XUSD uses a lot of incentivize for their, idea that their concept of trying to peg, which hasn't really picked up in the bear market, what I can see. So another question I had was the impact of whales in the ecosystem. So you might have a large pulse holder come in and come out. How does that impact the system? You've had many of those, or?
We've had some pretty big daily inflows and outflows in terms of the liquid staking side of things, where someone will come and dump 12 billion into the protocol one day and then turn around 3 days later and pull it out, and the system has to account for that. And we try and take a pretty measured approach with Vouch. Obviously, if Pulse is getting deposited into the system, it's got to get put to work by the validators to keep the yield up for all the stakers, because it is a pooled yield base. But you want to have liquidity there so that people can use it like a liquid staking token and move in and out freely. So it's a bit of a balancing act where you need enough liquid pulse in the system so people can freely move in and out, and you don't have to wait for validators.
There's a period, isn't there, between getting in this, getting the yield and unlocking validators and things like that, isn't there?
Yeah. So on PulseChain, we're pretty lucky. The exit queue is about usually within 1 to 2 days. You can from the validator indicating it wants to exit to actually funds out. Usually 24 hours at the most, 2 days.
Which is not too bad, but you guys still have to manage it for your protocol management.
Yeah, that's right. You still got to manage all that sort of stuff. On Ethereum, bit of a different story. To get in to a validator can sometimes take months. Yeah. There's a big queue. You can only add so many validators, so there's a big queue to add validators.
Yeah. It's massive right now. Yeah. So that's an interesting question, because I was just wondering around the whale thing, before we move on to that, is do you have entrance and exit fees then that you capture? No, it's a free flow. Okay.
Yep. Yeah. Try to keep it as true to the name as we can in terms of liquid staking. You want it to be easy for people to move in and out. And the good thing is, if let's just say you're in a massive hurry and you don't want to wait, like if there's not enough capital in the liquid pool within the actual protocol, you can always go sell your tokens on the market, and you'll take the slippage hit if you want to do that, if you're trying to move a big amount. But there's other ways you can exit out. Like, you don't have to wait for the queue, but it's generally more cost efficient to wait for the queue, and then you don't get any slippage at all. You're just getting your pure pulse out.
Are you aware of any large players accumulating right now that Vouch might be a good protocol for them if they want to maximize the yield, optimize the yield?
In terms of
PulseChain, just accumulating and coming in potentially coming into the system in terms of they want to validate and things like that?
Yeah, I mean, we've just seen some good inflows into the system over the last 24, 48 hours. So people, that's the beauty. People are free to do what the hell they like with their coins on PulseChain, and uh, now's a good time to like. We're at the bottom of a chart, I think.
Mm, mm,
Good time to get a decent bag, and if you're happy just to park it in a protocol and let it build 10% per annum from a base yield perspective, that's not too shabby. And if you start getting price uptick as well, that 10% on your initial capital can be much more than 10% in terms of dollar value yield. Does that make
Yep,
sense? So
yep,
that
yep.
you get the capital appreciation of the asset that you're earning as well. So yeah, if you got lazy funds sitting around, use a portion of it. Put it in the protocol. Use a portion of it. You don't have to go all in on anything. I don't advise anyone to go all in on any one thing, but yeah, put a little bit in there and watch it grow and see what it does.
Yeah, great. Have you found that your communities sort of gets around this? How's the vibe and because kind of
Yeah,
a collective kind of a thing to get into?
I reckon we've got one of the best communities ever. Like they're
Yeah,
diamond-handed legends. Like
yeah,
they've been real supportive when VOUCH came out, when we launched that. Obviously, you on an initial launch, you obviously get that big hype phase and things like that. But what we've seen is a core base of holders that have just held this token and they're not letting it go. They understand what it does. They understand that it keeps growing. They understand the supply keeps shrinking. They understand that everything's going back into the ecosystem and capturing the value in the VOUCH token and the VPLS token. So the VOUCH token is the true value capture token of the ecosystem. VPLS will always get you your base yield, but the VOUCH token is where you get to be effectively an owner of the system. You're getting to capture the value that the system generates.
Since you're such a large player in PulseChain in terms of validating and the pulse that's required, etc., excluding OA stuff, is is your risk and you've got the flywheel operating and you've expanded that? Are you looking at further potential higher risk yields capture, like top tier protocols, for
I wouldn't.
example, things like
I
that?
wouldn't say higher risk. So
Yeah.
the way we approach any additions to the protocol is they're not done for the sake of doing them. If they're additive to the value of the system
Mm-hmm.
in terms of another form of revenue or something like that, happy to look at it. Or if it adds a useful feature or utility to the ecosystem, we'll
Mm-hmm.
look at that. And I know there's a couple of
The reason why I'm just thinking, like, obviously you got Pulse going back in, which I think is awesome. So that whole thing's all intact. But I'm just exploring the idea of other, higher risk capture or yield capture, I should say. And that might be DEXs, DEX aggregators, liquidity forks,
Yep.
bridge protocols that have tokens, privacy, those sort
Yeah,
of top
well,
tier
that's a bit of a
protocols.
dirty word at the moment, is
So yeah, cool. But you could capture value from there potentially if you wanted to bring in higher returns into the system as a proportion of the total portfolio. So I just wonder whether you guys have explored that or not, or whether it's something that's not
yeah,
necessary because you want to offer this sort of range of flywheel based on
yeah,
more.
yeah. No, all good and valid points. And I guess for now we've been a little bit more internally focused in terms of we want to make sure that the components we've got in the system now are self-sufficient in their own right before we go having to rely on other protocols
Well,
on
that's not the
things.
way. Not rely on, but just lifting the
Yeah,
average
yeah,
yield. What I was thinking, yeah, because
yeah,
like I said, I wouldn't even ask you the question if it wasn't such a big protocol. Like if you're a smaller
yeah,
protocol, I'd just say just stick to what you're doing. It's
yeah, yeah.
no need.
Yeah, no,
But because of
no,
your
I'm actually,
significant,
I totally agree with you. And
yeah,
where I was going with that was initially just
yeah,
we want to make sure that we're sustainable and everything we do is about building the value for the
mm,
participants in the ecosystem. I know there's a lending protocol that's coming out, which I think will be. I know a little bit of the details about it, and I think it's a good solid approach.
Yeah.
VPulse will be collateral on that lending protocol. Obviously, as soon as you start introducing lending, comes with a caveat. You've got to understand the risks around that. But from a utility point of view, there's some really cool things that will offer, and I think that will help grow the ecosystem as well, in terms of deposits, in VPulse deposits. So that's I think that's a good thing.
Yeah,
because that gets our flywheel spinning even more. In terms of, like, we're very supportive of aggregators like Switch and those guys. And if you go to our DApp or our main landing page and use our little modal for trading on the Switch platform, we get a feed of revenue from that. So anything like that, we're all ears. And if there's other ways to introduce revenue that doesn't introduce a huge amount of risk, we're happy to look at all sorts of integrations with things like that. As long as we're being mindful about the risk and there's a valid reason for doing it.
I just wanted to get an idea of how far, in terms of yield that you guys are looking to go to. That's kind of the idea. So let's get back to the liquid side of things, with the protocol itself. So I think you guys have done an incredible job with this, and it's been, I've been looking forward to interviewing you about VOUCH. It is a major player on PulseChain, and you guys are, this is going to hopefully help get it even bigger. And we're still at the bottom of the bear market for PulseChain. Hopefully we're all going to bounce from here, but we'll see. Now, what would be some of this? The last question I want to ask is innovations, but with the how would people get into this if they were just brand new? What would be maybe a basic strategy that they would participate in the VOUCH here?
Yeah. So from actually, let's go to our lot of fake sites in crypto and dangerous things you can do if you click on wrong links. So the place to go for all of our curated links and information is vouch.run. From there, you can jump out to any corner of the ecosystem. Awesome information and explainers on how to use the protocol. But at a minimum, if you hold Pulse and you want to get some of the yield on your Pulse, if you click on Stake Pulse, that'll jump you out to our user app, and I'll have a look at that in a minute. Validating app, that's obviously a little bit specialized, and you need to understand a bit more about being a validator. Our dashboard is what I showed over here, and you can jump to that from most places.
You can just look a little bit on that, because that's
we'll go back and check that. So if you've got Pulse and you want to get VPulse, you stake it, and if you want to buy some VOUCH to be essentially an owner in the ecosystem or a part of the value capture, you can click on, this is that modal we were talking about. So this is the Switch modal. So if you come here and you want to buy VOUCH, you can do that straight from there.
And you've embedded Switch as I guess you guys collect a little bit of the fee on the way, so you're helping the public good of the protocol as well. It's pretty good.
So any fees that are done, so even if you're not trading VOUCH, if you're trading whatever token it is you want on PulseChain, come and use our modal. It gives us a little bit of a feed of the fee that you're paying anyway. It's just fee sharing from a fee that you're already. It doesn't come out of your pocket. It's coming out of the Switch protocol.
Big shout out to Brandon for that. That was great.
So we'll jump in and we'll have a look at our user app. So very simple to use. If you want to stake Pulse, you just chuck in whatever amount you want to stake and click the stake button and you'll get VPulse in your wallet. If you don't want to go any further than that, that's fine. That's all you need to do. Once again, you can get on the modal here to the buy thing as well. It's the same thing. The thing you wanted to have a little bit of a look at was the dashboard. Before we do that, just want to spend 2 seconds on the staking pools, if you don't mind.
Go for gold.
Was a little bit of community service information. So with the staking pools, if you hold VPulse, this is the one you can come and stake on here. That's that capital pool that gives up a little bit of the yield, but you get more return of the VOUCH. If you hold VOUCH, this is the side you'd want to come and stake on to earn more VPulse and
Yep.
more vouch.
Mm-hmm.
So a bit of a community announcement. If you are in one of the old pools, there's not too many people still in there. We've got a little bit left in there that needs to get taken out. So if that's you, come and take your funds out. You're not earning anything in the old pools. Come and move it across to the new pools. All right, dashboard. Let's have a look at that. So if you click on dashboard here, it'll take you to the same thing, but
Yep.
we'll go back here.
Mm-hmm.
And we probably need to update this a little bit since we've introduced the staking pools. There's probably some more cool information we can add to the dashboard, but this was done prior to the staking pool release.
Mm-hmm. Yep.
But effectively, what it's doing, it's tracking revenue generated from the token side and revenue generated from the liquid staking side.
Yep.
It shows us how many validators we've got and so forth. Percentage of the supply burnt. What I think is nice to understand on this page is, all these metrics are nice, but the detail in the information is, okay, what happens to these revenue streams? Where do they go?
Yeah.
And I'll just flip over to here where I talked about the distributor layer. I said all the revenue comes into the distributor layer. That's what you see on the dashboard. That's the distributor layer settings here.
Okay.
So this revenue, any revenue that comes into the system hits the distributor layer and is carved up in these percentages. So 5% going to liquidity pools, 25% going to build more validators,
Yeah.
15% going to the liquid staking protocol. So if you hold VPulse, that's good for you. You get rewarded there. We've got our insurance fund. Treasury gets a bit, and Voter Relays, they get a very tiny amount. It's just basically to pay the gas fees in the system.
Okay.
The other interesting component is, okay, well, what do we do with this is circa around 50%. This is around 50% here. What are we doing with the funds that hit this lower section? So the Vouch reward pool, the VPulse reward pool, and the Pulse reward pool. You can see nothing goes to Pulse at the moment. So it's a feature that's there. We just don't switch it on. We don't think it's worth switching on. And I'll explain why in a minute. So let's focus on these two pools, because this is what's really important. We'll focus on the Vouch reward pool. So 43% of the revenue coming into the system drops down into this pool here.
Okay.
Where does that go? So that's that 43%.
Yep.
It gets split between stakers, so people in the capital pool or the other rewards pool, the Vouch pool.
Yep.
If you're just a Vouch holder, and then the burn address.
Okay.
So that's how that's carved up. Same thing on this side, 6%, 2% going to holders, 4% going to stakers. Yep. So that's how we can choose to reward different behaviours in the network.
Yep.
And what we're going to do over the next coming week is we're going to tweak a few of these numbers. We think we can reward stakers a little bit better, still have the system perform really well by maybe reducing a little bit on the validator side, potentially reducing a little bit here as well because it flows back to them anyway. And those reductions we make here, we will boost up these areas down here. So we're going to inject a little bit more rewards into the system. We want to encourage people to be part of the capital pool because that keeps that flywheel going for us. So we want to make sure that people are incentivized for doing that. So that's what we'll look to do is we'll tweak a few of these settings and we'll make sure that Vouch holders get more VPulse.
Okay.
But all stakers get more Vouch. Yep. So that's the few changes we'll make over the coming week, and the view to doing that is let's boost the yields on those staking pools and encourage the behaviour we want to see.
Okay, fantastic. So that's the website vouch.run, and all you have to do is get involved. Is go to the stake page, your pulse, and go from there. The other one, of course, is follow on X as well. You can follow it on the X. It's Vouch LSD, and your Telegram group obviously is awesome too. So people can find the link from the X account there.
We went deep in the weeds on this one, brother.
No, that's fantastic. I really wanted people to get a sense of how important what you guys have set up is, and where it sits compared to Ethereum, with the kind of rocket pool Lido category, and people got Pulse sitting around. Could be something that they can just park their money in and earn a nice yield. And you guys are optimizing it all the time. I got one last question before you go. We're about an hour and 5 minutes now. Is that dashboard looks great, so looking forward to the tweaks. The yields are exciting as well, and people, just park your Pulse in there if it's something that suits you. Obviously, do your due diligence and all the rest of it. Is around the innovation front. So we kind of explored a little bit around the yields. Any other kind of innovations that you can tease us with or let us know about at the moment?
Yeah, definitely want to see phase 2.1 bed in a little bit before we go chucking too much more at the wall.
Yeah.
So yeah, want to make sure we get that right, and I want people to see the flywheel come into effect and see yields grow and things like that. So let the community sort of understand that. I've had my head in the weeds for 6 months and understand all the little nuances to the system, but I think users of the system need to get comfortable before we forge ahead too much. We've got and this is not our protocol, this is someone else's protocol, the lending platform. That's going to be exciting to see how that interacts with the system, and we'll be partnering with that particular platform, which I mean that's public knowledge anyway now. That's
the 369, is it?
The VOUCH platform.
Yep.
Yeah, so we've probably got a little bit more of an insight into some of the
I
UI.
think that's a fantastic move. I think that's a really great move. It's going to be multi-chain, right? Yeah, so I think that's really great. That's expanding VOUCH, and you guys are already got farms on like I think Emmett Farm and things like that. So this expanded.
What in terms of innovation, what I'd like to see is how do we capture some of the value that is over on other chains and get that back over here? So not only just from a user's perspective, but is there other streams of revenue or something, or other things we can do?
Who's which protocol or which teams are kind of doing that well already on PulseChain, other than obviously the natural reality of the official bridge? There's probably just one or two, I imagine.
And they're very unique things. Like there's a lot of teams on PulseChain that are now multi-chain. And obvious things are like Jexxas and aggregators and things like that. They're obviously, that lends itself to that sort of thing. Liquid staking on PulseChain, a little bit harder to export over to other chains. Obviously, you can do it on Ethereum and things like that. We're very similar to those guys, but that's a pretty saturated market over there. But we're happy to look at any sort of thing where we think we can drive more value into the VOUCH ecosystem or into PulseChain in general.
Okay, that's pretty awesome. Hey, look, Jexxa, you've created an absolute masterpiece, and it looks like it's getting a few extra strokes of brilliance in it, so it's pretty awesome. Really appreciated you coming on, and guys, I mean, if you've got Pulse sitting around, it's certainly one of the I think low-hanging fruits to park some Pulse in and enjoy those nice yields. I think it's pretty exciting in the future. We're all looking forward to Pulse going up the other way. So it might be closer than people think. Who knows?
I guess the silver line is it's nice to see when you see Bitcoin and ETH go up in value. We do see PulseChain follow as well. So we're not in a little bubble. The whole space moves together, as you know. So see a few things change on the macro level, and we can have a totally different environment very quickly.
That's right. Well, I mean, you guys, not only are you offering great yield service, but you're a public good for the whole of the chain. So we thank you for your service.
Thank you.
And hey, look, I'd love to have you back on in a few months when you've done some more innovations, got more data and everything else. That'd be fantastic.
For sure.
And appreciate you coming on today.
Perfect. Thanks for having me on.
Cheers. Hope everybody enjoyed that. It was a great show, and we'll catch you on the next one. Take care, everybody. Bye for now.